Fairholme Funds recently unveiled a proposal to invest $52 billion into Fannie Mae and Freddie Mac in an effort to buy both firms' mortgage insurance business. Fannie and Freddie remain in government conservatorship. However, they have become very profitable in recent quarters. According to Fairholme, its deal requires no government support and will allow for a liquidation of Fannie and Freddie, ending their special status with the federal government without disrupting the mortgage market. Joining us is Timothy Howard, a former CFO of Fannie Mae. He's also written a book called The Mortgage Wars, which details his perception of what led to the collapse of Fannie and Freddie. Tim, what do you think about Fairholme's proposal?
I think it's an important addition to the dialogue about what to do to reform the mortgage finance system going forward. I think the Fairholme proposal as made is unlikely to be adopted the way it was made, but it will add to the mix of discussion in a way that I think is positive.
And I think the Fairholme proposal also really seeks to clarify our thinking about Fannie and Freddie, which remain in government conservatorship. What do you think is the ultimate goal of a workable solution for Fannie and Freddie?
Well, I think, Antoine, first is to preserve the integrity and workability of this $10 trillion mortgage market that sits at the heart of the American economy. We saw what happened in 2008 when the mortgage market melted down. We're still feeling the effects of that. So this time out, we've got to get the fix right. And the more perspective that is brought to it, my book attempts to add more perspective to it. I think the better quality of solution we're likely to come to.
And let's talk about your book for a minute. What were some of the big points you really wanted to hammer home in your book?
Well, I think the biggest point that people miss is that the mortgage crisis was the result of a fight between the government chartered companies, Fannie Mae and Freddie Mac, and banks and bank regulators over how to finance mortgages in this country. The Fannie Mae and Freddie Mac model, which had government-sponsored guarantors and purchasers, was not supported by the Fed and the Treasury because they didn't believe the government should have sponsorship. And their approach was a private market-based solution with very little government regulation. And that did not work well. As soon as you took the controls off mortgage underwriting, which the private label securities market did, you had loans made that borrowers never could repay. Credit quality went down. You had people taking out mortgages who couldn't afford to pay them back. That caused the bubble that blew up. So we need to learn a lesson from that and see what didn't work and what did work and incorporate that into our solution in the future.
Tim, thanks so much. I'm Antoine Guerra, banking reporter with The Street.
Thank you.